You're perfectly positioned to talk about this cross-asset. The FX channel here. Something's developing now that did not develop last year, and that's some Chinese currency weakness for a fifth straight session. A move on dollar China of 0.9%, 1 full percentage point, and that kind of stuff is pretty rare, Jay. How are you internalizing those kind of moves?
Yeah, it's absolutely right, John. And it's funny you mention that because the reserve cut requirement today after the close in China is the opposite of what they were doing a year ago when they were worried about too strong currency in China, and they were raising that reserve rate requirement. So, I mean, I think in essence, the currency is not a huge issue for China at this point. They control the currency. They're highly unlikely to let it get out of hand. We had a view a couple months ago of China 2022 being a glide path. That's been completely wrong this first quarter. It's been anything but a glide path. So I'm a little bit hesitant to make too many opinions about the near-term future. But in essence, I think China has the policy flexibility, both monetary and fiscal, to deal with the situation, and they have the experience to deal with COVID. For example, plants in Shanghai are already restarting production. So yes, they shut things down quickly, much more aggressively, very different than the rest of the world, and then they gradually reopen. And I think that's going to continue to be the case throughout this year.